Welcome back. You're watching DD India News Now. Lepakshi Kuranan on to some business news now. The number of companies looking to list on the Hong Kong stock market looks poised to pick up in the second half of the year after the slowest start to a year for listings since 2008. But analysts say competition with markets such as India and China's slowing economic growth could continue to impact investor confidence, as Laura Westbrook reports for more from Hong Kong.
In the heart of Hong Kong's business district, attracting new companies has become a tougher sell. PricewaterhouseCoopers says total funds raised on the Hong Kong market in the first 6 months of the year was down 27% to $192 million year on year, with just 30 companies making their debut.
When investors invest in Hong Kong, it's basically investing in the Chinese economy, in Chinese corporates, etc. But obviously, when we look at the global capital flows nowadays, there's basically better stories in other markets like the US or in Asia, Japan and India, or even in the Middle East.
But the big four accounting firms say things are looking up, pointing to more deals in the pipeline in the second half of the year. July was the busiest month for IPOs this year, with 10 companies listing.
Hong Kong really needs to prove itself with some great companies coming to market and those deals being successful, really, to put itself back into the top 3 of IPO markets, which of course in the past it has been for many years.
New rules, which came into force last year, give China's securities regulator much greater control over Chinese companies' ability to list overseas, adding another layer of red tape that has hit Hong Kong.
Over the last 3 years, high US interest rates, China's slowing economic growth, as well as stricter regulations and geopolitical tensions between the US and China have all dented investors' confidence. Analysts say that uncertainties remain, and it may take a while before things improve.
Beijing has recently pledged to speed up approvals for listings outside of the mainland. That could see more firms listing in Hong Kong this year. But last year, the average size of a Hong Kong IPO was 70% less than it was 2 years ago. With mainland Chinese companies continuing to dominate the Hong Kong IPO market, analysts say looking beyond China's borders to convince companies in the region to come to Hong Kong might be the way forward. Laura Westbrook in Hong Kong, reporting for DD India.